So here we go, traders. Short on S&P in a progress. Very important level to the downside, 27.74. Oil news just came out extremely bearish. We stayed out through so much junk, through so much noise this morning. We waited patiently for oil news to come out. As we discussed since Monday morning, bearish trend is major. When markets started crashing from Fibonacci Reversal Zone, and as we discussed since early this morning, if price will crash to this level, it's a gift. But first things are first. To the downside, this is crucial support. So on this short, we know how crucial this level is. This is also institutional support area. When you're dealing with institutional support, it is the area, not to the tick. Trader who trades multiple lot size and protects his profits had taken some profits off the table and trailing very, very closely. Because the bullish pullbacks from this area can be 3 points, can be 30 points. Price been stuck here for the last 10 minutes. No surprise. This is a place you exit your short if you're trading very small lot size. No surprise. What price is doing? So, this is exact same support where Tesla had been for years and years and years. Do you remember this? Chart present in the room for years. 255 is lifeline on Tesla. This is what Tesla looked like in 2017. Let me remind you. Tesla 255. And this is S&P right now. Did we know or did we know that buyers will step in? Shock or not. You want to trade with institutions and not against them, you know, or to get the heck out of your trade. And if buyers step in with vengeance and institutions defend this area, this support, just like Tesla had done for the last 2 years, you're not surprised. That support been present since Monday. This is the area. This is where institutions step in. On hourly chart, much wider area. When it comes to day trading, not the place to short near. Agree? Identical formula on all the instruments. Identical Fibonacci level. And this is Apple. From key support at 91 when Apple came out with the worst earnings in 13 years. Do you remember 2015? Worst earnings in 13 years. Poor Apple had doubled. Shock or not. Why? Fibonacci said so. And that's exact same level on S&P right now. S&P is doing exact same thing. This is a place to exit your short. This is a place to monitor for long, no matter how horrific the earnings are. So, buyers stepping in. How many points did S&P already moved? My goodness, look at that. Many. Knowledgeable trader expected that. 5 points. And if S&P gonna move 15 and 50, knowledgeable trader will not be surprised, because that's institutional support, where a day trader exits his short. And that's the power of the method to the tick. No matter what you trade, accuracy will remain the same. So ladies and gentlemen, this is a chart that have been present in the trading room for the last year. This is institutional chart that's showing you trend inception and trend reversals. This is where institutions started selling the markets in the month of September 2018, all identified months in advance. Price collapsed until Fibonacci Reversal Zone, and this is where buyers stepped in. Markets are brutal and painful. Why? Bullish rally overextended. Institutions doing practically nothing. What do we need to do? We need for institution to start taking profits off the table. And we need for markets to start crushing a whole lot more. Agree? That would be the gift. That's when market will start being comatose and slow. And as expected on Monday when price came to Fibonacci reversal zone, after nasty and brutal chop, finally market crashed. It's a gift. One more obstacle remains, this support, this area. If this support remains respected, institutions continue being weak when it comes to selling pressure. So, this is the reason buyers stepped in on Monday. This is the reason you saw what just played out. So, know where to exit your trade, know where to enter your trade. No indicator on the planet will ever give you that. Only Fibonacci and pure price will. So if you would like to join us in the course, pretty please review the information on the website. The moment you sign up for Mastery Group course, you can start viewing prior class videos and start reading modules. If you are considering private mentoring 6 months course, please speak with me first. And please remember, all group classes, trading room videos, modules are included. Brad is still my mentoring student. Brad will be in graduate bootcamp. We just met in New York. My mentoring students become my dearest friends for life. Brad was making $11 an hour until he took the course. First group, next private mentoring. So, if you make serious effort, if you're serious about trading, you came to the right place. Right now I work with beginner traders, I work with hedge fund managers. Every single trade a different account, every single trade a different instrument. What you choose to trade, absolutely up to you. One of the most important sources on the website is our YouTube channel, where you can see we're actually crossed 2,700 subscribers who are following
my goodness,
our channel. Everyone seeing this? So, go back many years and view the accuracy of the method. Choice is yours, what you choose to trade. And if you have any questions, do not hesitate to contact me. 925-257-4298 or info@fibinstitute.com. I always look forward to hearing from you. The institutional support being present in front of you since 2018 can remain in play for weeks, months. This is what caused this bullish push. This is not the place to short, the place to exit your short. And while we were taking a break, knowledgeable trader taking advantage of this bullish structure. Right now, if price is pulling back, it's a gift. Rules are met, take a trade. And if you're trading with institutions and not against them, you are always on the right side of the market, no matter what you trade. So, S&P right now collapsing as low as possible to institutional support is a gift, because that's what knowledgeable trader does. Monitors for long at institutional support, not buying into day trading resistance.